Imagine betting your entire fortune, not once, but multiple times, on ideas that most economists and investors called impossible. Rockets that land themselves, electric cars that outsell gasoline giants, an AI and rocket company merging into a nearly $2 trillion public entity. That's Elon Musk. Love him or hate him, his companies have created hundreds of billions in value, disrupted trillion-dollar industries, and forced the entire world to rethink energy, space, and technology economics. Today on the Econ Lab, we're not doing hero worship or cancel culture. We're breaking down the Musk economic playbook, 5 hardcore lessons every entrepreneur, investor, and thinker needs in 2026. Real strategies, real numbers, real economic truth, no fluff. Let's dive in. Lesson 1. First principles thinking, the ultimate economic superpower. Most people copy what works. Musk breaks problems down to physics and rebuilds from scratch. This is economics at its purest, questioning costs, value, and constraints. Classic example, SpaceX rockets. In the early 2000s, buying a rocket launch cost tens of millions of dollars, priced closer to what legacy aerospace charged than to what the materials were worth. Musk asked, what is a rocket actually made of? Aerospace-grade aluminum, titanium, copper, carbon fiber, commodity materials that were a small fraction of the sale price. He didn't accept the aerospace industry's markup. SpaceX vertically integrated, iterated relentlessly, and introduced reusability. Today, a Falcon 9 lists for around $67 to $70 million commercially, but independent analyst estimates put SpaceX's actual marginal cost per reused booster launch somewhere in the $15 to $30 million range, meaning the real cost per kilogram to orbit has fallen roughly 90% since the space shuttle era. That gap between cost and price is what funds Starlink and Starship. Starlink now runs on a constellation of roughly 8,000 plus satellites and over 10 million subscribers globally. That's not just engineering, that's creating massive consumer surplus and new markets. Tesla batteries followed a similar path. Battery packs seemed insanely expensive a decade ago. Musk broke costs down to raw materials, then engineered around them. As of 2026, Tesla's own dry process 4680 cells are reportedly its lowest cost cells yet, with pack-level costs in roughly the $75 to $115 per kilowatt-hour range, depending on chemistry and factory. Down from well over $200 per kilowatt-hour a decade ago, Tesla has said its long-term target is closer to $50 to $55 per kilowatt-hour at the pack level. Economic truth. First principles destroy rent-seeking and legacy inefficiencies. In a world of inflation and supply chain fragility, the entrepreneur who reasons from fundamentals wins market share and margins. Actionable tip for you. Next time you hit a "that's just how it's done" problem in your business, write down the basic physics, materials, and labor components. Ignore competitors. Rebuild the cheapest, best version. That's how you create durable economic moats. Lesson 2. Calculated risk-taking. Bet big when the upside is asymmetric. Elon has nearly gone bankrupt multiple times. In 2008, both Tesla and SpaceX were weeks from collapse. He put his own money in, worked brutal hours, and kept going. Why? Because he understands power law economics. In venture and innovation, most bets fail, but the winners return 100 times or more. Traditional corporate thinking hates this. It optimizes for steady, predictable returns. Musk optimizes for breakthroughs. He bet his PayPal fortune on SpaceX and Tesla more than once when both were nearly out of cash. Economically, this created huge externalities. SpaceX's reusable tech didn't just make Musk rich, it birthed a commercial launch industry now worth hundreds of billions. And in June 2026, SpaceX itself went public in the largest IPO in history, raising about $75 billion and debuting at roughly a $1.8 trillion valuation. Tesla accelerated the entire EV transition, forcing GM, Ford, and Toyota to invest billions or lose market share. Real verified 2025 to 2026 numbers. According to Tesla's amended 2025 annual filing, Tesla recognized $573 million in revenue from sales to SpaceX and xAI combined in 2025, $430 million from xAI, mostly Megapack battery sales, and $143 million from SpaceX, mostly Cybertruck purchases. A later SpaceX S1 filing disclosed the cumulative total is closer to $890 million since 2023. Cross-company synergies are turning individual risk-taking into portfolio-level strength. Truth bomb. Not everyone should bet the farm. But if your idea solves a massive problem and you've done the first principles math, calculated risks can compound into real societal wealth. Most entrepreneurs fail by playing too small. Lesson 3. Ruthless capital allocation. Move resources where they create the most value. Musk doesn't treat his companies as separate silos. He allocates capital, talent, and technology across them like a portfolio manager. Tesla sells Megapacks to xAI for its data centers. SpaceX buys Cybertrucks. Engineering know-how flows between the companies. And in February 2026, SpaceX formally acquired xAI in an all-stock deal, consolidating the rocket business, Starlink, the xAI models, and the X platform under one corporate umbrella. a combined entity that priced its June 2026 IPO at roughly $1.75 to $1.8 trillion. This is smart economics. Reduce transaction costs, capture synergies, avoid dilution. While critics call it a conflict of interest, and Tesla's own related party disclosures have drawn real governance scrutiny from investors, the market has so far rewarded the consolidation with a historic valuation. Lesson for entrepreneurs: track every dollar like it's your last. Kill projects fast that don't compound. Reinvest profits into high-conviction bets. Running multiple capital-intensive businesses at once the way Musk does comes from obsessive focus on bottlenecks and iteration speed, not from having infinite resources. Bottleneck thinking. Always ask, what's the single biggest constraint right now? Attack it relentlessly. Lesson 4, iteration speed. Move fast and fix things. Perfection is the enemy of progress. Musk pushes intense iteration cycles. Tesla ships over-the-air software updates constantly. Factories improve week over week. SpaceX launches, learns, iterates. Falcon 9 flew well over 130 missions in 2025 alone, a cadence that would have been unthinkable for any expendable rocket program. This is economic acceleration. In manufacturing, learning curves mean each doubling of production tends to cut unit costs. Faster iteration means a steeper learning curve, which means lower costs, sooner, and stronger market position. Compare that to legacy auto. Years between model refreshes. Tesla updates cars over the air like a smartphone, which builds customer lock-in and recurring value. Truth. Speed has costs, quality issues at times, employee burnout. But in winner-take most tech markets, shipping a good enough solution that improves rapidly tends to beat a perfect but late one. Entrepreneur tip: set aggressive deadlines, ship MVPs, measure your learning rate, not just your output. Lesson 5, long-term conviction, build for decades, ignore quarterly noise with a reality check. Wall Street loves smooth earnings. Musk thinks in decades: sustainable energy, multiplanetary life, AI infrastructure. This mindset attracts talent and patient capital, and it creates real optionality. Tesla started as a niche sports car company and built the platform for mass EVs, energy storage, and now robotics. Here's the most dramatic proof point, and it happened just weeks ago. On June 12, 2026, SpaceX went public and Musk's net worth crossed $1 trillion, making him the first trillionaire in history. That was 2 decades of decade-scale conviction, surviving 2008, funding Starship out of Falcon 9 profits, betting on Starlink before it made sense on paper, paying off in a single trading day. But here's the reality check that any honest economics breakdown has to include. Within 3 weeks, SpaceX's stock had swung hard enough that Musk briefly lost trillionaire status, with his fortune dropping from a peak near $1.45 trillion to under $1 trillion by early July 2026, before partially recovering. That volatility is exactly the quarterly, even daily, noise Musk claims to ignore. The lesson isn't that long-term thinking guarantees a smooth ride. It's that conviction has to survive real, sometimes brutal, mark-to-market swings. And most people don't have the balance sheet or the stomach for that. Economic reality check. Short-termism destroys long-run value, and Musk's long-horizon bets clearly created enormous economic surplus over 2 decades. But 2026 is also a live demonstration that concentrated, illiquid, story-driven wealth is extremely volatile, which is a real risk, not just a footnote. For you, define your multi-year vision, align decisions to it, and communicate it clearly. But size your personal risk so that short-term volatility doesn't force you out of a good long-term bet. Closing. These 5 lessons: first principles, calculated risk, ruthless capital allocation, iteration speed, and long-term thinking aren't magic. They're disciplined economic thinking applied at extreme scale. And 2026 has been the single most dramatic real-world test of that thinking that we've seen yet. Musk isn't perfect. There are valid criticisms around execution, labor practices, market power concentration, and the related party dealings between his companies. But ignoring the economic lessons and the very real volatility that comes with them would be foolish. What's one lesson you're applying to your venture this week? Drop it in the comments. Hit like if you want more deep economic breakdowns, subscribe for the Econ Lab's weekly truths, and share this with an entrepreneur who needs it. See you in the next lab session. Stay curious, stay truthful.